I like to think of Bitcoin as insurance on, and I'm not calling for the collapse of the fiat system, but there are certainly economies, fiat-based economies and fiat systems around the world that have collapsed.
Hey guys, welcome back to Everyday Finance. In this video, Greg Foss discusses about Bitcoin. According to Greg Foss, everyone always watches the Bitcoin versus US dollar trading pair. But when you dig deeper into the individual fiat currencies around the globe, the performance varies greatly. Take the US dollar versus Turkish lira, for instance, or the US dollar versus Argentine peso. Long tail cut short, while there are others who would argue that this is absurd. I won't name. That's okay because my perspective on Bitcoin is distinct from theirs, however. In order to effectively manage portfolio risk, you must have assets that are not connected. I don't want to get too technical with short volatility assets versus long volatility assets. A long volatility asset is one that indicates that when the VIX rises, all short volatility assets, including stocks, private investments, and real estate, are crushed. But long volatility assets indicate that when the risk the VIX Treasury bonds used to be that long volatility asset against the short volatility assets of the global catastrophe, and their value has been rising, in the current interest rate environment, bonds are no longer as protective. I think that Bitcoin is currently cautious, but that doesn't guarantee that it will react that way. The world needs a lot of education to realize that Bitcoin is an asset with long volatility, which is insurance by Foss's definition, and lots of things Greg Foss discussed, so please watch the video to end, and share, subscribe our channel, Everyday Finance. Thanks.
Bitcoin is many things to many people, but I talked about my history in the credit markets, and for Greg Foss, I like to think of Bitcoin as being insurance on the credit system, the fiat-based credit system. And in that light, I don't want to get too technical, but I've used credit default swaps on sovereign debt to value Bitcoin, to provide an intrinsic value for Bitcoin. And that model can actually be accessed at nakamotoportfolio.com, which is the website that was based on the Nakamoto Gauntlet, right? That we ran the Ontario Teachers Pension Plan portfolio through. But again, keeping it at a level, I like to think of Bitcoin as insurance on, and I'm not calling for the collapse of the fiat system, but there are certainly economies, fiat-based economies and fiat systems around the world that have collapsed. I like to say that Argentina has collapsed 4 times in my career. I'm not proud of that, but imagine being an Argentinian whose basically fiat system has defaulted 4 times in your life. It's very hard to get stability, and people will say, well, don't worry, we live in Canada, or, we're a G7 nation. I hate to say it, but of the nations, the G7 nations and lower, meaning, G1, G2, Canada's at the highest risk of financial calamity of all those other countries. It's the smallest of the countries. It's got, while we are a very large trading partner of the USA, it's got inherent problems in the system. And I'm not calling for the collapse, but you need to protect yourself against something that's happened in Turkey, which is a G11 country. So that means we're only 4 notches removed from Turkey in terms of the size of our economy, where the Turkish lira has experienced all the problems they're experiencing. And if you look at the performance of Bitcoin in Turkish lira, it's astronomical. Everybody always looks at the trading pair of Bitcoin versus the US dollar. But when you break it down into the individual fiat currencies around the world, the performance is vastly different based on the trading pair of the US dollar versus the Turkish lira, for example, US dollar versus the Argentine peso. Long story short, I view Bitcoin as insurance. Now, there's other people out there that would call that nonsense, including, well, I won't name names, but that's fine because Bitcoin is something different to them. But when you manage portfolio risk, you need to have non-correlated assets, and understand this carefully. I don't want to get too technical. Assets that are short volatility assets versus assets that are long volatility asset. And a long volatility asset doesn't mean the asset itself is volatile. It actually means that when the VIX increases, all short volatility assets are getting crushed. Equities, all sorts of private investments, real estate. But long volatility assets, meaning when the VIX rises, increase in value. And it used to be treasury bonds, used to be that long volatility asset against the short volatility assets of the world. Treasury bonds in the recent interest rate climate are not that protection anymore. I believe that Bitcoin is. Now, be careful. Just because I believe it doesn't mean it will react that way. And there's a lot of education that's needed for the world to understand that Bitcoin is a long volatility asset, which means it's insurance. That's a Foss definition. But since Bitcoin is decentralized, cannot be printed into infinity, is not controlled by any CEO or central banker, it possesses a protocol that I believe is insurance that can't be messed with, right? It's not like, oh, we're going to change our mind on what Bitcoin is. So I hope that helps. It's certainly, you can look at the correlation of Bitcoin to other assets out there, equities, treasury bonds, real estate, private equity. And you can draw your own conclusions as to what the correlation is and what sort of protection it can provide as a non-correlated asset. But from a credit guy, the biggest thing I'd like to leave you with is that actually is insurance. And by definition, insurance is a long volatility asset, which as the world riskiness increases as measured by the VIX, over time, I believe Bitcoin will be viewed as not a risk-off asset, but an asset that performs well in a risk-off world, and therefore provides portfolio diversification benefits. Long answer, Elliot. Hopefully I kept it as simple as I could but when you manage money, you need to understand these terms, and that is imperative.
According to Greg Foss, one must comprehend that the effects of the network are contingent upon a specific supply. This is the most fascinating aspect of Bitcoin. Its 21 million units are safeguarded by the world's most secure computer network, thus creating a defined scarcity. I mentioned that you might bring in scarcity for the stock to flow. Compute's a single model. Many people disagree with it. Some individuals, you are able to use network effects. You may present the cost of insurance, which increases the market for Bitcoin. Is it rich? Inexpensive if you own any? And I'm really infatuated with technology. But come on, people, I just turned 60. Avoid visit me to gain insight into technology, just as you shouldn't pay attention to Charlie Munger, with all due respect to a man who is 90 years old, when he claims that Bitcoin is rat poison, who has excelled in the financial markets. Therefore, I wouldn't receive technical guidance from him. And the reason the Bitcoin community finds things so fascinating is the technology's intrinsic value is judged by the network effects. As I like to compare it with stock-to-flow models, examine it realist, since Bitcoin is new. No one can truly describe what it is. Technology and protocol dating back 14 years to transfer value over time.
You have to understand that these network impacts are all in the context of a certain supply. This is the coolest thing about Bitcoin. There's 21 million of them. defended by the most secure computer network, if you will, in the world. And you have this scarcity, defined scarcity, that you could bring in, I said S2F, stock to flow calculations, one model. Lots of people don't agree with it. Some people do. You can bring in network effects, you can bring in insurance pricing, all of which adds to the market for Bitcoin. Is it rich? Is it cheap? Should you own some? And I am enamored with the technology, absolutely. But come on, guys, I just turned 60. Don't go to me to understand technological wisdom, much like you shouldn't listen to Charlie Munger when he says that Bitcoin is rat poison. All due respect to a 90-year-old man who's done incredibly well in the financial markets, I wouldn't get technological advice from him. And that's what makes things so exciting in the Bitcoin community, is the technology, the network effects, intrinsic value measured as I like to look at it versus how stock to flow models look at it. Elliot, no one can define what Bitcoin is because it is Bitcoin. It is a new 14-year-old technology and protocol to transfer value over time and space, which is so valuable, not to me and you, well, more to you, but to me, I'm 60. Like, I own Bitcoin. Why? So I can give it to my kids, okay? Because I believe Bitcoin is one of the most important technological advances in the history of mankind. I also believe it to be insurance. I also believe it to be Bitcoin. It's the only digital asset that is truly decentralized. You have other crypto assets and you can play around with those if you want, but only Bitcoin provides me the protection I'm looking for to the fiat system that I have grown up in and have concerns about its reliability over time. So Bitcoin, not crypto. Bitcoin, not blockchain, okay? Blockchain technology exists only for decentralized systems. And Bitcoin for the kids. That's the most important thing. For the people in Africa that now have, that are unbanked, that can now have a bank account on their phone, right? All of this is just beautiful stuff for a fat white guy from Canada who's spent a lot of time in the trading pits of the fiat markets, and it's scary. It is really scary. There were times taking the train, the GO train in Toronto, going to work with you in the morning in March of 2009, and we had good positions on. We were in a good spot, and I'm like, oh my God, I'm so nervous the world is going to end. And we were close, you guys. I'm not pulling any punches. And it'll take me all the way back. This is important. And I don't want hate mail. I'm going to tell your advisors this. I don't want hate mail. But I get concerned with the reliability of the Canadian banking system. And I'm not out there. I'm not ambulance chasing. I'll just tell you that my first job coming out of business school in the US, coming back to Canada, was working for the CFO of the Royal Bank of Canada, directly for him. And I examined the Latin American debt portfolio of the Royal Bank of Canada because of a plan that US Treasury Secretary Nicholas Brady had put into effect called the Brady bonds. My job was to pick the option that the Royal Bank of Canada was going to take for their transfer from 5-year loans to Mexico into a new instrument called a Brady bond. It was an amazing solution, but all it was accounting gimmickry. Because when you did the accounting, the true accounting, and if you had marked to market the loans of all the Latin American debt that the Royal Bank of Canada owned, the book value of equity was vaporized. And that is a very scary position when you're just coming out of school and you're like, Canada's largest bank is actually insolvent. Oh my God. And it wasn't just the Royal Bank. It was all the money center banks in the US. Chase Manhattan, which is now part of JP Morgan. Manufacturers Hanover, which combined with someone else. I don't remember. Chemical Bank, combined with someone else. But banking is banking. Banking is 25 times levered to its equity capital base, its risk absorbing equity, which means you have 25 times the amount of risk, dollar for dollar, than you have risk absorbing capital. Don't you think that 4% to 6% equity capital can get vaporized on a regular basis, on a mark-to-market basis? And the answer is yes, it can. And it's happened 4 times in my career. So it's not just protection against country, it's protection against the banking systems in countries. It's protection against the events that take down some of the regional banks in the USA, right? That we've seen happen. So look, we have a lot of risks in the fiat system. And it's my opinion that every investor needs protection against these risks. And that protection comes in the form of Bitcoin insurance, if you believe that. But what I would encourage, and this gets back to my portfolio allocation, if I could convince you to hold 5% of your portfolio in Bitcoin, I know what's going to happen. You're going to look every day at the value of that Bitcoin line item in your portfolio and forget about where the other 95% of your portfolio is invested. And what I encourage you to do is get up to a portfolio weight in Bitcoin that's manageable from your ability to sleep at night. But more importantly, don't focus on the 5%. Understand the risks that are inherent in the other 95%. How much bank stocks do you own? 2 years ago when I wrote my paper, I'm like a pound a table sell on bonds. You have to get out of some bonds and into some Bitcoin. Well, that was pretty timely from the point of view that interest rates have gone straight up and long-term bonds have actually been destroyed. I think the TLT is down 62% from its all-time high. That's a bond, a risk-free bond holding, down 62%. Damn, Elliot, like we're in a new paradigm, different interest rate, different valuation methodologies, different players, and Bitcoin can protect against a little bit of all of that. And yeah.
Well, that's a great, okay, so that's a great jumping off point, right? So I wanted to, as we come to close to the end of the podcast, I wanted to play a little game with you if you're up for it. Okay?
All right.
So this is a game everybody can play who's listening, it's okay if we don't know all this stuff off the top of our head, but I want to put in context Bitcoin and just one particular element in terms of thinking about what goes into a portfolio. So I'm going to play a game. I'm going to name something, and then you're going to say, is it bigger or is it smaller than Bitcoin's market cap? Okay?
Yes, sir.
All right. Big 6 Canadian banks, combined market cap, bigger or smaller than Bitcoin?
Bitcoin's at 500 billion-ish US.
550. Yeah. 550.
Okay, 550. Yeah. Bitcoin's bigger than the big 6 Canadian banks.
The beauty of Bitcoin is that it has no borders. For example, we can do all of this on Canada to make Bitcoin appear large, but Canada is a rounding error in the context of global economies. So there are a lot of things that mean Bitcoin is actually pretty small, and that's why it can grow to be so large. Total global financial assets in the world are between 800 and 900 trillion US dollars, which includes everything. Total debt of about 350 trillion US dollars, and then real estate at roughly 300, and then global equities, commodities, and currencies. Everything revolves around the number 800 trillion, albeit it's actually closer to 800 trillion. We'll pick the lower end of that number. What would happen if Bitcoin gained 5% of that market share? 5% of 800 trillion. Thanks for watching, guys. If you learned something from this video, please like this video and subscribe this channel, Everyday Finance. We will meet in next video. Thanks.